Welcome to Crypto Flywheel, podcast where we spin up strategies to turn your digital efforts into unstoppable momentum. Now, let's get that flywheel turning. Take it away, Professor X.
Digital X, thank you very much. Now, let's start with this episode with the quiet regulators. Why the Office of the Comptroller of the Currency matters for digital assets. We're listening to right now on mainstream headlines focused on war and energy, right? But the real story is also central bank policies. And the real story is happening quietly inside regulatory agencies. One of the most important institutions shaping the future of digital finance in the United States especially is the Office of the Comptroller of the Currency, the primary regulator of national banks. When the OCC speaks, the banking systems listen. And increasingly, the OCC has been signaling the digital assets and blockchain settlement rails that are not fringe technologies, but part of the evolving banking infrastructure. What does the OCC regulate? Why are they so important right now? They regulate national banks, federal savings associations, major custodial institutions. These institutions collectively control trillions of dollars in assets and settlement flows. Over the past several years, the OCC has clarified that banks may engage in several digital asset activities, including digital asset custody, stablecoin settlement, participation in distributed ledger networks. This is not speculation. We often talk about these assets that we constantly talk about at the Crypto Flywheel. It's not speculative. These are infrastructure preparation. These are settlement layers. And why this matters is because when banks are allowed to custody digital assets and settle transactions on blockchain networks, the traditional banking systems begins connecting directly to new financial rails. These implications are enormous, guys. Instead of waiting days for settlements, like Digital X mentioned in a previous episode, that we don't have to wait no longer for settlements across corresponding banking networks for days. The value can move across interoperable digital ledgers in seconds. So that means this is the beginning of what many call the Internet of Value. We talked about that in the previous episode. So this is very important. And this is why we at the Crypto Flywheel keep talking about these ISO 222 coins and token. They are the fundamental infrastructure layer. They're the settlement layers. They're no longer speculation. These assets are going to go up in price when the proverbial switch is flipped. So what do you got to say for that? Do you have anything further to add on this, Professor X?
Yeah, let me add. Okay, so the OCC, what they do is they oversee roughly about 1,100 national banks and federal savings associations. And you want to know how they're funded? They're not funded by Congress. They fund themselves through fees paid by the banks they regulate. And what do they actually do? They grant bank charters. If the banks want to operate nationally, meaning across all 50 states under one license, they have to get approved by the OCC, right? So then what they also do is they examine banks regularly. So the OCC examiners literally go inside banks, review their books, their risk management, and their operations to make sure everything is sound and legal. And what they also do is they write the rules. So the OCC issues guidance and regulations that tell banks what they can and can't do. When they publish an opinion on or a ruling, banks have to pay attention or risk losing their charter. They also protect consumers. So part of their mission is making sure banks are treating customers fairly and operating safely in the space. So OCC plays a big role in our banking financial system. So aside from all the other agencies.
Yeah, this OCC is just one more, arrow in our quiver when it comes to the ISO 20022 standardization and the ecosystem, the token and the coins that facilitate all of these transactions, right? So this ecosystem. So we have to comprehend that, right? Go ahead.
So the OCC in 2025 has become one of the most consequential actors in this entire crypto space. So they're the ones that's deciding whether banks can hold crypto, trade it, pay blockchain fees, and whether crypto companies can become banks themselves. So for decades, OCC was seen as a slow-moving conservative institution. But right now, it's arguably one of the biggest forces shaping the future of our digital finance.
Agreed.
That's
Agreed.
how important they are right now.
What's that? Say that last part again.
That's how important they are right now.
Well, absolutely, especially with the Genius Act that passed, with stablecoins, stablecoins are being rewritten. And that changes everything, like what just happened right now. A couple weeks ago, I know we're a little late on this, but we were, with all the stuff that's happened, we waited to talk about this OCC stuff, right? What just really happened was the Office of Comptroller of the Currency just drew a hard line. Stable coins in the United States are not allowed to pay yield. Remember that? We talked about that? They're not allowed to pay yield, and that's why they're kicking this Clarity Act down the road, down the road. So basically, they're not allowed to pay yield, not directly, not indirectly, not through affiliates, not through white label partnerships. This is not a tweak, guys. This is architectural. They don't want to. They want the banks to have the control. Everything has to flow through the banks, and when it does flow through the banks, what happens is that the Treasury of the United States, there's more liquidity. That the debt is absorbed by these new fresh money coming into the marketplace. You know what I mean? So this rule reframes stablecoins from digital saving instruments to pure payment instruments. The distinction is the ignition point for today's flywheel discussion. Essentially, we need our listeners to understand the importance of this OCC.
Yeah, the main reason why the banks don't want to give out yield for exchanges or allow exchanges to have yields for retail customers is because they're scared of the money leaving the banks into the exchanges because there's greater yield being distributed, right? Not only that, banks then cannot do that fractionalized reserved lending crap, right? So they're losing capital. So overall, their leverage is being gone.
Yeah. Well, that's also when you kind of zoom out here on Digital X. When we zoom out, we see that stable coins they want to set the stage where when stable coins, they lose yield, corporates no longer park treasury balances, what I was just saying, right? In them for returns. Small and medium enterprises lose incentives to hold idle balances there. Platforms lose their strongest acquisition hook. But something else happens. Capital seeking yield will migrate back to tokenized bank deposits, money market fund wrappers, institutional digital cash products. This means banks regain savings gravity. And when the banks regain gravity, they regain liquidity dominance. So essentially, that's why they're kicking this can down the road and have OCC coming in and doing what they're doing, right? So they're trying to get a stranglehold over retail investors like you and I and our listeners, right? So that they don't get too wealthy. And the proverbial term here is what? Generational wealth. They don't want a bunch of millionaires walking around, millions and millions of millionaires, right? So they want the few that follow and comprehend this whole new asset class and are holding the underlying assets. Those are the ones that are going to get that generational wealth. So having a few of these assets and exposure to them, you can definitely get generational wealth. Go ahead, Digital X.
Yes, you're right. It's all about having conviction and belief in what you hold. So be patient because all of us are doing the same thing. You're not alone. We're all in it together.
Yeah. So, I don't have anything further to add other than the generational wealth moment. And I can't stress that enough, guys, because there's so many things that are happening and the smoke that we see outside is in terms of geopolitical narratives, that is to deceive us. It's to deviate that attention of what's being built behind the scenes. They don't want, like I said, millions of millionaires are moving around, right? So, but if you listen to our show, you can understand, position yourself. This is not financial advice. However, we say this because this is our passion. We follow this very in depth in terms of, and tie it in all to the macros from the geopolitical narratives, right? So with that being said, I don't have anything further to add. Do you have anything further to say, Digital X?
Well, go ahead and fly wheel out of here, Professor.
Well, yeah. Awesome. So, hey guys, this is We want you to continue to enjoy the weekend. And if you do have comments or questions, please ask, comment on the comment section and ask questions so that we can engage further. With that, this episode of the Crypto Flywheel is signing off. Thank you.
Thank you.